All right. We're gonna we're gonna go ahead and we're gonna try this again. Banks are banking on banks. Will you? What to expect from the market tomorrow and the next week ahead are precise daily stock levels as well as our game plan in Forex. I am Mark Melnick and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. Just a little technical difficulties there, but let's get right back into it because the banks are banking on banks. And what do I mean besides trying to sound cutesy by using the same word three times in one sentence? The stress test came out today, and this is basically what happened, what you need to know. You see a lot of the banks gapping higher here, names like Bank of America, and a lot of them were already priced into the options. And we're going to talk about exactly what happened. So we're going to start off with Bank of America, $20.6 billion stock repurchase. They're raising their dividends 25% to 15 cents a share. Amazing, right? Amazing how they raised their dividend. So I guess that's 12 to 15 cents. So all of a sudden these tests come out and it was kind of funny. So the Fed did its annual examination of the capital planning practices of the nation's largest banks. We all know this happened since the whole financial crisis where the banks dragged down the entire market and then got bailed out not by the government, but by you, the taxpayers. Yeah, you're responsible for such lovely things like this. So, what are they doing with the money that you paid for them to bail them out with? They're buying their own stock back and they're buying billions of dollars worth of their stock. To me, I look at this and I'm like, something just doesn't feel right here. So, first of all, I'm looking at the chart, for example. So, Bank of America, you're doing a 20 billion repurchase. Was the economy that much different back in 2016? Was the economy, I mean, Bank of America was a $12 stock. Now it's a $28.50 stock approximately. Now you want to do a 20 billion repurchase? Okay, not the brightest timing. Let's go ahead and look at what Goldman Sachs did, another bank who passed the stress test. So looking at Goldman Sachs right here, another very beaten up name, they came out raising their dividend to 85 cents a share. That's just 5 cents from 80 cents and they're doing a $5 billion stock repurchase. Okay. Is it just them? JPMorgan, also name that was a little beaten up recently. $20.7 billion stock repurchase between today and June 30th, 2019 under a new common equity repurchase program, and I'm going to tell you what it means momentarily. So let's just look at two more banks here. Wells Fargo, um, also funny. Wells Fargo said that they're going to buy $24.5 billion. It's mind blowing how much money they're buying back their stock in. And they also raised their dividend to 43 cents a share from 39. And last but not least, the Citigroup. I'll tell you these numbers and then I'll explain what it all means. So on Citigroup here, they're boosting their dividend as well because that's the trend. It's almost as if, you're ready for this? All these bankers were sitting in a room together and they said, okay, this is what we're going to do. It's not a coincidence that they all came out simultaneously with multi-billion dollar stock repurchases. Now, these banks aren't stupid, and I'm going to tell you what's going to happen to them. Citi coming out with a $17.6 billion stock repurchase, but they're planning it over 4 quarters beginning in Q3 of this year. So basically, between these stock repurchases are going to be between this year and next year. Now, let me ask you a question. Let me ask you a question. If you're buying hundreds of billions of dollars of these banks, and you're these banks doing hundreds of billions of dollars worth of these buyback programs, why would you want to buy them down here? Now, unless you really think the market is just going to have that another leg up, the way I see it is it's sort of a scam. I find it way beyond unbelievable that all these banks coincidentally came out with multi-billion dollar stock repurchase and every single one of them raised their dividend. I mean, why? Now, why would they do that? I'll explain. If they buy back their common shares, guess who gets to keep the dividend? The company themselves. So by raising the dividend, they're basically saying that they want to take the money they earn and they want to keep it and they want to pay themselves for it. So they're not buying back their stocks because they believe that they're well priced at these levels. You see, that's the misconception. That's the illusion. That's the sleight of hand right here. So these banks, they're not buying back their shares over here because they think, oh, what a great value. You have Citigroup at $66. Wow. Oh, really? Really? That's what you're so excited about? Goldman Sachs, 5 billion. JP Morgan, 24 billion. Okay. 2 years ago, these shares were trading at half the amount they are today. Half the amount. So what is going to happen? These banks are heading lower. Now, hear me out. They're going to head lower. So all these scamming behind closed doors, and I'm not a conspiracy theorist, it's not a coincidence that every single one of these banks raised and increased their dividend. They want to buy back their stock for this dividend. I'm going to show you mathematically why this makes sense. So let's use just stupid simple numbers here. And I'm going to go ahead and show it to you here. Okay, so let's use simple stupid numbers. Okay, you're a bank. You made $100,000. I know we're using small numbers just to show you an example. I know it's like very bright in your screen. I'm using Notepad. So what you want to do is you want to buy back $50,000 worth of your shares. But what you do is instead of paying, again, just for number's sake, a 10% dividend, you now want to pay a 15% dividend. So what you do is you take this money, you buy into the $100,000, you buy your shares back, which is a phenomenal amount of shares. Don't underestimate how large these stock buybacks are. And then what you do is you boost up the price of your stock by removing supply from the market. There's supply and demand. They're creating the demand and eating the supply. And as a result, they're taking their shares and deciding to pay themselves more. Now, it's not illegal because they wouldn't do anything illegal. It's corrupt. That is the word. It is corrupt. Now, why is it corrupt? If you're a shareholder, you should be happy, right? Wrong. And I'm going to tell you exactly why you are why uh, why you are getting scammed. What's going to happen tomorrow is you're going to have every analyst, their mother, their next door neighbor, their cousin, their best friend's sister, everybody, their pet dog, their parakeet is going to fly out and they're going to talk bullishly about these bank stress tests. They're going to be like, wow, they're raising this, they're doing this, they're doing this, they're doing this. And the banks will go higher at first. But what's going to happen is if they want to make the most of this, if they want to, do you realize what a difference it is when you're buying? So let's just take Bing. I'm trying to explain it, and then I'm going to tell you how to take advantage of it. So JP Morgan is buying $20.7 billion of stock. Let's call it $20 billion. So just to show you. So, but JP Morgan closed at 105 today, 104.93. I'm just showing you for numbers' sake, right? What do you do when you have 25 $20 billion, $20.7 billion. So 27, let's do $20 billion just because I need you to see visually what kind of number it is. You see this number? 1, 2, 3, 4, 5, 6. That's, millions, 10 millions, 100 millions, billions. That's what 20.7 billion looks like. Divide that number by 105, where it closed today. We're rounding off 7 cents. And how many shares do you get? You get an obnoxious number of 197.1 million shares, right? 197.1 million shares, right? Beautiful. The same dividend is being paid on every share. No matter where JPMorgan is at $1, it's at $200, you're getting the same dividend, right? Now check this out. Let's say JPMorgan drops 10 points, which I'm actually predicting, and you actually end up paying 95. I just need you to see the number, and then I'm explaining to you how you could take advantage of this. So here you have million, 10 million, 100 million, billion, 20 billion. That's 20.7 billion divided by 95. And you get a number of 217.8 million shares. 217.8. You get 20.5 million shares for free if the stock drops 10 points. Now, a 10-point drop in JP Morgan isn't a big deal. As a matter of fact, since the beginning of the year, the stock jumped up 20 points, dropped down 15 points. It happens. It's not a wow, JP Morgan dropped 10 points. So when you deal with 20.7 million shares, 20.7 million shares, and then you start multiplying it by the dividend, it makes financial sense for these companies to sell off. Now, when they sell off, what's going to happen is people look at things called the dividend rate. What percentage dividend are these banks going to be returning to you? And certain mutual funds that pick up millions of these shares of these banks. I know I call Goldman Sachs a bank because, I have a Goldman Sachs debit card inside my wallet because there's a Goldman Sachs ATM machine and it exists nowhere in the world. But what's happening here is they are setting you up for failure. They are setting you up to screw you. Now, I'm not saying JP Morgan doesn't react initially up, but there's going to be a move after the up move. It's not going to skyrocket high. I mean, everybody who's reading this news is going, and the analysts will come out tomorrow. Again, we're predicting what happens tomorrow, today. You're going to see those analysts coming out tomorrow. And hold on. One second. What's going on? Did my Facebook feed drop? Yeah, my Facebook feed dropped. That's weird. I wish I figured out some way to continue it. That's annoying. Okay. Try to continue it. So, what's going to happen? What's going to happen with these banks is that pretty much these banks are going to get destroyed in the coming weeks. These banks are going to get destroyed. Now, what happens with these buybacks is they're trying to make it delusional. As, look, we are buying the stock, but we're raising the dividend, but when are you going to buy the stock? So what they're going to do, and no Captain Hindsight, I'm predicting the future, right? What they're going to do is they're going to juice up the stock. Analysts are going to juice it up, and it's going to be shorting opportunities. What I have realized is there's only one reason that these companies do these massive buybacks. It's when they're having problems. Let me prove it to you. How many repurchases of shares did Netflix do this year? 0. Remember when Apple was having the iPhone sales? They did their biggest buyback ever. Remember when Facebook was in the media for all the leaking customer accounts and problems? They also bought a ton of their shares. And it ended up working. I mean, the names actually ended up going higher afterwards. So, looking here at the banks, they have problems. That's what you're not seeing with the stress test. Everybody's going to come out tomorrow, and all the analysts are going to come out and be like, "Oh, they passed their test." Do you realize what the Fed said during these stress tests? I'm going to prove my point further, and then I'm going to tell you how I'm going to trade it. The Fed does not object to capital plans of 34 financial companies. They didn't say you were doing a good job. They just said, okay, we're not going to jump in and ruin your party yet. That's all the Fed did. That is all the Fed did. There's one-time reductions, tax law changes, does not reflect a firm's performance under stress, and firms can expect higher post-tax earnings going forward. The board also issued a conditional non-objection for the capital plan from State Street Capital, the object to the capital plans of Ally Financial, American Express, and it just goes down the list with all these names. But you know what these banks did? You know what these banks? Oh, and did I mention American Express is now boosting their dividend and buying back stock? Now, I'm not saying we're not going to experience the biggest bull market ever. I am just saying that these banks, when they pop, need to be shorting opportunities. So let's take a look here at JPMorgan and certain levels that I might look to short. A good level to short JP Morgan for me. I don't know if it gets there tomorrow, but 100, actually it might, 107.28. If you start pushing through 107.28 in JP Morgan, that would be an opportunity for me to short. And I'm just going to keep a watchful eye on all of this. I'm just going to keep a very watchful eye. You have to be very careful here because they're going to try to suck you in because all these companies are now raising dividends and buying back stock and look, terrible timing. The fact that they all did it at the same time was so they could pass the Fed's stress test. So if you come out and the Fed is looking at you and say, all right, show me your numbers, show me what's good, show me what's bad, show me what could go wrong. They're investing in stocks. Every single one of them, every single one of the 34 financial firms that were under this Fed stress test decided to repurchase stock and do a dividend. They're doing it to appease the Fed, and they know that. And because they gave themselves an ability to buy it at 2019, I hate to tell you, these banks know what's going on with them better than we do. And the smartest thing for these banks, the smartest thing in the world for these banks to do would to be to go south. Now I know everyone's going to come out and saying this is the new bank bull market. This is the new bank bull market. Everyone's buying back simultaneously. Everyone is raising dividend. The world is great. Everything is going to go higher. Be my guest if you feel that way. I'm not saying even these banks are shorts tomorrow, but I am saying you are going to get a massive short opportunity, and don't think these banks are stupid enough to begin their share repurchase program at the current stock levels. With that being said, let's just go into what you can actually expect from the market. So I think this is a very big question here. I think we were dealing with an extremely low conviction day in the triple Qs. I didn't think today was a conviction day by any stretch of the imagination. There's a good chance we go higher. I bought some CMG calls. A lot of people came out bullish on CMG today, and it was just it was a good look today. We were able to call one of the bottom levels right here, one of the bottom levels right here today where it was trading. But I think this one can work. Another name that hit an algo buster reversal level is Dropbox, and I took some lotto calls in that too. That was also a real-time call out within the room, and let's just take a look at Dropbox. So um, this is what it looked like on the 5 minute, and I just did a little screen. Right over here, you see our trend line hits, the stock bounces. It's amazing. By the way, there is a promotional offer for you guys who want to, you know, join the Newsbeat live room for a much cheaper rate. A lot of people have actually, uh, posted. Is my internet working? I think my internet is working. A lot of people actually were looking for a great deal. Thank you to everybody who actually came today and were part of everything. So thanks a lot for that. And thanks for showing up. I think you could go to t3live.com/Mark. Is my internet working? Can you guys hear me in the room? I'm still good. I'm still here. All right. Okay. And yeah, so we were able to do that. Again, I think the markets could edge a little higher tomorrow, and then I think we're going to have a very bearish next week. We'll do the full analysis and more. How about we just get right into our precise daily stock levels here? I know I'm having a lot of connectivity issues right now. I have no idea why that is happening, but okay. With that being said, right over here are all your stock levels, and you can feel free to screenshot them now. I am having internet difficulty, so we'll go over more in the room. Name I'm watching on my game plan is Madison Square Garden, MSG. Stock hit all-time highs today for a beautiful break of 304.45. If you guys want my game plan in Forex, um, again, I wish I wasn't having these technical difficulties. Been on a little bit of a streak lately in the Forex market. A lot of things have been working. Here you get buys. Here's my trading size. You get the symbols right next to it, the price, the stop loss, and the take profit. And you're more than welcome to copy them here. So right now, we go into our full stock analysis. Ladies and gentlemen, that is for Newsbeat Live members only. If you are interested in a phenomenal deal on our products, t3live.com/Mark, that's MARK, and you could get some phenomenal deals to try one of my courses that help you achieve consistency, be part of the Newsbeat Live community. We are the fastest growing trading room in the nation. Happy trading, make money. I'll see you guys next time on the Newsbeat Live trading broadcast. Have a wonderful evening.